In foreign subsidiary, what we will be looking into would be that the parent and the subsidiary accounts will be combined because we do that for consolidation. But remember, subsidiary is in pound and parent may be in dollar, right? So all the figures that you have is subsidiary, right? You have the balance sheet. You will have to convert the balance sheet on the date of reporting to the closing rate of that year. Closing rate is the rate on the 31st December or whatever, right? Only then you can add. Correct. Now think of a situation. Last year you had no depreciation, nothing. Last year you had land, and this year you have land. So when you are going to consolidate, say just land, right? So this is like, parent, and this is like subsidiary. So land. So land is of, $100,000. And the subsidiaries is in pound, okay? I would say $300,000. And subsidiaries, say 100 pounds, 100,000 pounds. Okay. So last year when we consolidated, we converted this. And let's say the exchange rate was 1 pound is equal to $1.5. Okay. So how will you convert now? Conversion will be how? 1 pound is equal to $1.5. So when we convert, what we will do, won't we make it as 150? Yes or no?
Yes.
So now we'll have a consolidated statement that shows 450, right? And next year, with no purchase, no changes at all, this is 300 and this is 100,000. Now the dollar rate is $1.75 is equal to 1 pound or 1.60 whatever. Okay. So now how much should we put over here? We should put 160, right? So this becomes now 460. So even if you do nothing at all, the double entry will be what? We've done nothing, just the value has changed. So when we are consolidating, it will not match, no, without doing that entry, right? Definitely it's a gain for the parent company, correct? No?
Yes.
So the gain has to be shown. These are the kind of gains and losses that you may end up with. This is just one example, and there are many more examples. The question is it a realized gain or a not realized gain? Now, you're not selling anything, you got a gain. Next year, the rate may become from 160 to 140 also, 1.4 also. Then you'll show loss, gain, loss, gain, loss, gain, loss, right? Is it to be shown in the P&L account because it's not realized? The subsidiary is not been disposed of or something. This is a question, so I'm just parking the question, okay? So what we should know is, we should know what is functional currency, presentation currency. You absolutely know it. You should just know the concepts because you're going to be tested on the conceptual knowledge, not so much in the question, answering and all that. So we're talking about, the financial reporting standards. And then that we covered, that foreign exchange standard we covered. IAS 21, I think 21. And then translating. So we're not looking at transaction, but we're looking at translating the financial statement of a foreign operation. Right? Now we look at the theory part, which is going to be tested for you. Within an increasingly global economy, groups including acquisitions and mergers of companies based overseas are commonplace. Within an increasingly global economy, right? No, all is global. What is not? One war there, everywhere, everybody is sending rocket. It's like that now. Even war has become global, right? So groups including acquisitions and mergers of company based overseas are commonplace, all happening. If a parent is to acquire control of a subsidiary that uses a different functional currency from the parent, complications regarding the consolidation arise. The two main complications are translation of the foreign currency subsidiary into the parent's functional currency. Translation. Okay. Then the resulting calculation, just now I showed you, and the recognition of foreign exchange gains or loss. I demonstrated both to you. So that is the 2 points you must remember for any note writing. The next thing you must remember is what? This. If the functional currency of a subsidiary is different to that of the parent entity, it will be necessary to translate the subsidiary's financial statements into the parent's presentation currency prior to consolidation. Let's read that again. If the functional currency of a subsidiary is different to that of the parent entity, it will be necessary to transfer subsidiary's financial statement into the parents, right? Prior to consolidation. Simple, it's very clear. You got it. Rita's joined. Rita, hi.
Yes, ma'am.
Yeah, hi.
Good morning, ma'am.
Good morning, good morning. You have holiday today, Rita?
No, ma'am, I don't.
What time you need to
But
leave?
I'll leave at 7:30. Sorry, 7:30 here means around 9. 9 is the time.
No problem. You can always do it. Okay. Yeah. All right.
Ma'am, the practice kit will I get by
And you
today?
today you'll get it. Today you'll get. Okay.
Thank you, ma'am.
I've arranged with another person there. Yeah. If the parent prepares accounts in dollar and acquires subsidiary with euro, right, we translate into your dollar. This is done by using the closing rate. Okay. And the foreign exchange rate should be used. Remember, if it is balance sheet, we'll definitely use a closing rate. Okay. 31st, whatever. Even the goodwill calculation, we will do the closing rate. And imagine we would have done the goodwill calculation last year, goodwill will be something. Are you getting that, both of you? Again, we'll do goodwill calculation. Remember, for goodwill calculation, what we should do? Convert the subsidiaries, all the numbers into the parent's currency using the closing rate. So last year, the closing rate was 1.5. This year, the closing rate is 1.4, right? Goodwill itself will be different. That also leads to exchange fluctuation. Now, impairment of goodwill, another interesting thing. Impairment is a P&L item, right? It will go into P&L. Now, P&L, what do? It's not end of the year, it's throughout the year. So we should use average. Average rates are given in the exam. For case study purpose, it won't be like about being given. You need to look at what is this average rate. There can be some situations where some highs and lows can happen. Brexit happened, war happened, so the rate will fluctuate. That spike in that one thing can be removed. You know, when you take average, you can take the average of daily 365 or month end. Month end also is good enough. If one particular month end has got a very different rate, you can remove that and do for 11 months. Whatever, simple thing, logic, apply fair, just justify what you're doing with some fair, method of valuing. So remember this, income and expenditure average rate. And sorry, what happened to my book? Now, exchange gain or losses due to performing the translation of the subsidiary into parent's functional currency. Exchange differences will arise. Exchange differences on translation of a foreign subsidiary are always held in equity and other comprehensive income within the consolidated financial statements. Equity and other comprehensive income. Exchange differences on translation of a foreign subsidiary always held in. Why are they saying equity and other comprehensive income? Why are they saying this? Are they saying equity is equity? Why they're saying are held in? Because you don't hold anything in the other comprehensive. Other comprehensive income gets merged in the balance sheet. So why are they saying held? Okay, we'll have to examine this word, okay, this particular note. Going forward, exchange differences can be traced to two main things. Exchange differences on the net assets. I just told you an example, the land value. I said the land was showing as 150, now it's become 160, right? So you're adding 300 plus 150, 450. Next year you're doing 300 plus 140 or whatever. Okay. So closing net asset should be equal to opening net asset plus the total comprehensive income. Yeah, technically speaking, forget individually. If you really look at it deeply, there was an opening net asset. Where did we get the opening net asset from? Should be from the last year balance sheet. Otherwise, where else will we get? Consolidated statement, last year's. So opening net asset is there. Right? No opening net asset of the last year, because we already finished that thing, plus the comprehensive income. If the rates were same, they will match. But the rates are not same, right? No. So these components of subsidies net asset translated as follows. Opening net assets are initially translated at the opening rate. Why should we do opening rate? Last year when we did the closure of the balance sheet, what did we use? We used last year's closing rate. So current year it becomes the opening rate, no? That's why we are saying that opening net asset is initially transferred the opening rate. Then the total comprehensive income for the year will have been transferred at the average rate, obviously. And then you will have to find out the closing net assets at the closing rate. Now you see the gadbad, because it will not match at all. Too many things have happened here. So that will give the difference, and that is the exchange fluctuation. As different rates are used to translate these components, a difference between the closing net asset and the opening arises as a balancing figure. Correct? No. And where do we take it? We're taking it to, we'll see that. Okay. The difference is caused by fluctuation in the exchange rates, variations between opening, closing, and average rates. This difference is the foreign exchange, currency exchange gain or loss from translating the net assets. Remember that. How we will treat, we will look into. So this note for the case study, even for the objective exam, definitely, but for case study, write as essay, right? So you need to be very clear on these notes. Now, again, let's go to exchange difference on goodwill. Foreign subsidiary goodwill is calculated in the currency used by the subsidiary. Remember that. To calculate the goodwill, what do we need? We need the currency of the subsidiary only, net assets on the date of, no, purchase consideration. Purchase consideration. Let's look into that. When the parent is paying to the subsidiary, the parent is calculating the goodwill as what? Purchase consideration paid in the parent currency, right? Add that percentage of the NCI or whatever NCI minus the net asset. Let's see what they're saying. Foreign subsidiary goodwill is calculated in the currency used by subsidiary. The year-end goodwill is then translated at closing rate. Okay, one of you explain to me, because right now I'm drawing a blank. Why are they saying this? Foreign subsidiary goodwill is calculated in the currency used by the subsidiary. When we are calculating the goodwill, what are we doing? Purchase consideration. Correct? No. And we have the parent book. So don't you think that purchase consideration is the parent currency? Yes or no? We're just brainstorming here, okay? Do you agree?
Ideally, should be more.
Yeah, because what is the other way? In the subsidiary books, we don't have any numbers. Okay, unless, I'm just imagining, they gave us how much was paid. Like, for example, yes, they would be giving us the rate, The company acquired, so much share on this date when the rate was so and so. So we should convert and use it like that. So we take purchase consideration received. Only it will make sense. You cannot add apple and mango. So we'll use that. Add the NCI value, which will be the subsidiary currency, minus the net asset deduction. Perfect. Okay, it's perfect. Right? No. Now what happens? We get the goodwill in the subsidiary currency. The year-end goodwill is then translated at the closing rate. That we did last year also. That time it was different. Again, we're doing this year. It's going to be different. Now what we should do? Goodwill at the year-end should equal goodwill brought forward. It won't be. Of course, impairment may be there. because the exchange rates are different. Correct. Now, impairment was in the average rate. Impairment is a P&L item. Let's see what to do. Goodwill brought forward would have been translated at the current year's opening rate, last year's closing, current year opening. Impairment will be translated at the average rate, P&L item. Real gadbad, right? Goodwill carried forward will be at the closing rate. If exchange rates have fluctuated during the year, a difference will arise between goodwill at the year end compared to goodwill brought forward, less annual impairment. This difference is the annual exchange gain or loss from translating the goodwill. Now we're going to see where it will go, P&L, balance sheet, P&L, or OCI or P&L. Now we'll see that. But this is the note that one has to get clearly, word by word by word by word, with understanding plus with memorization. Okay, this is a very, very important thing. If there's but one question in F2 and this is the only question, you ought to be able to score it. Okay. Then I'll fix up the classes for you, Nimi, with Sir for the E2 perspectives. Okay, that will be done with him. Then accounting treatment of the exchange differences on translation. Accounting treatment of the exchange differences on translation. This is what we want to know, right? No. The sum of exchange differences on net assets and the annual exchange difference on goodwill goes to OCI. Remember, we saw two things, no? The net asset part and the goodwill part, both of them, you add them together and take them where? To take to OCI. One may be positive, one may be negative. So just take it to OCI. Allocation of exchange difference between parent, shareholder, and NCI. That's also important. Now we have this exchange fluctuation. The exchange differences on net assets always split between the two. Exchange difference on translation of goodwill. Here they've told us what? The sum of the exchange difference on net asset and the annual exchange difference on goodwill. Okay, both will be recognized in OCI, but they're saying that we have to split. The treatment of the goodwill exchange difference depends upon fair value or proportion method. If fair value method is used, a portion of the exchange difference is allocated to the parent shareholder and the NCI. Otherwise, it just goes to the parent, which is very apparent, which is something which we understand. And here they've given us a template. Learn this template. Very, very important. What is it? Net asset, closing rate we have now, and opening. Okay. So we subtract. Then the difference is the gain or loss. But what happens? Closing rate is there, but opening rate subtracted. No, sorry, opening, what is that? Comprehensive income you subtract. Obviously, that should have been the opening, or the other way around is that, take closing, subtract the opening, subtract the thing. Some figure is left out, it should be plus minus, and that is a loss. So let's put some numbers. If you don't put number, you'll be confused, okay? Ideally, the closing net asset should be more. Correct? No, because we are on profit, let's say, 200. And the opening was, say, 150. So what do we think? 50 should have been the profit. Correct? No. But no, profit was only 40 actually, because in the average rate, the profit was 40. So what happened here? Why did, see, if the opening was 150 and the profit was 40, correct? No, opening net asset, W2, part 1. And closing should have been 190, no, but we are getting 200. So why did it become 200? The 10 would be the profit. So plus or minus, the figure will be without the bracket. Okay, if it's going to be a loss, it will be with the bracket. Now, exchange difference on goodwill for the year. Exchange difference on goodwill for the year. Closing goodwill at closing rate. Opening goodwill at opening rate. There's a difference. But there should be impairment also. Be careful of that. Correct? No. So what they're saying is add back. Why are they saying that? So closing goodwill and opening goodwill should be same only actually, should not be different. Except if there's an impairment. Closing goodwill. And there was an impairment of 5, okay? Last year. Or the current year, I think so. Current year. Opening goodwill was 50. And the closing goodwill is, should it be that way or the other way around? A closing goodwill is 50. Opening goodwill is 60. So if this is the figure, so then we are removing this. Okay. So by apparently from this, what we can make out that the opening goodwill was 60 and impairment should have been 10. Correct? No. Impairment should have been 10. But we found out that the impairment was only 5. Impairment was what? 5. So when we say add back, what is the meaning? So opening negative 60, closing. So 60 and 50, I end up getting minus 10, right? No, minus 10. And they're saying that add back impairment. Impairment is only 5, right? Add back impairment. What am I getting? Minus 5. So that means there was a loss. Minus 5 will be what? A loss, right? No. So this is the way you remember some examples. I think I'm taking more time to remember my own example, but you will remember it faster than me. Now, treatment. Whenever you're ready to leave, you can leave it. I'll continue and then I'll send you the recording. Okay. Treatment.
Thank you so much.
Yeah. Treatment. You're welcome. Treatment of the consolidated statement of financial position. The group share of these foreign exchange differences would be held in a separate reserve. Don't put them mingled with the retained earnings and all that. Okay. Within equity in the statement of financial position. Very important to remember this. This reserve would show the total exchange gains or losses arising since the acquisition happened. The exchange difference here from goodwill must consider the total exchange differences arising on goodwill since acquisition. The exchange difference here from goodwill must consider the total exchange differences arising on goodwill since acquisition, not just those arising during the year. Obviously, so many times that exchange differences would have been there, you know. So since the inception, the difference between goodwill transfer the rate in existence at the acquisition and transfer the closing rate is used to determine the exchange difference on goodwill that has arisen since the subsidiary began, right? That's what we need to present. There is an example illustration. I would like you both to do it by looking into the answer and then we shall discuss if required. If no discussion required, we'll proceed, okay? Yeah, I'm pausing.